Last week I covered Jeremy Grantham and David Hunter, macroeconomists, and many wonderful comments. Thank you very much for that. And some people had some questions, maybe a little bit doubters. And so I wanted to address that this time to give context. And the other thing I did not do, which I said I would do, which is to go, and so what do you do about it? So I'll cover that. So today is July 23rd, 2024. My name is Ben Reppond. Welcome to my YouTube broadcast. Okay, last week I covered David Hunter and Jeremy Grantham in general. David Hunter, they're both macroeconomists and money managers, but they see things from a macro point of view. I know that Jeremy Grantham is a hedge fund, and so they do use all kind of instruments, including buying them as well as shorting. I don't know as much about David Hunter, but they've both been around a long time and have been right a lot of the time. But what I want to say is about David Hunter is he's macro, which he says that, and he's a contrarian. So in other words, when the market is up, he is going to be pointing out when he believes, or maybe why he believes, the next cycle of the market is going down. And when the market is down, and he's been doing this for decades, when the market is down, he's going to be talking about when the market is going to go up. He's going to be optimistic when it's going up, and probably what will cause it to go up. So contrarian and macro. Jeremy Grantham is a student of bubbles. He calls them super bubbles. He looks at the four that have happened in the last 100 years and sees that we are in a super bubble right now. People who are critical of him will say, he's been saying this for 10 years. Okay, when you're macro, I don't know if he has been saying it for 10 years, but certainly a few years. When you're macro and you're looking for super bubbles, bubbles that actually pop and create a lot of damage, you are not going to get it precisely right. You could miss it a few quarters, even a few years. So it's important, I think, when you look at people like this, to see that they are students of the market. They have been right most of the time, and that's what they do. There are other people, I'm going to mention them now. Warren Buffett is one of them. He looks at cycles, and maybe super cycles, macro cycles, which are considered a secular bull market or a secular bear market. They tend to last for a decade or a couple of decades. David Hunter thinks we're in a long-term secular bull market that he believes has lasted since 1982, which is 42 years. But usually the period of time is at least a decade or two. But Buffett sort of does the same thing. He has been accumulating money. He has accumulated $189 billion, and he is looking for an opportunity to buy things. What he's trying to do, because of his philosophy, is he is trying to buy things cheaply. And to do that, he's waiting for the market to crash. I mean, really crash, so he can buy things at a price he wants to pay. He knows what he wants to buy. He's just looking for the right price. And so then you look at Seth Klarman out of Boston, Baupost Fund. He is considered a younger version of Warren Buffett. He tends to do the same thing. The money that he manages is private, not public, as Buffett says, and he manages about $30 billion. But very similar style. He also has been accumulating money and waiting for something to buy. People on Wall Street, I've read this, people on Wall Street say, I want to send you money because I like the way you invest and your track record. His track record, this is Klarman now, Seth Klarman, he has over 21 years since 1983, 41 years, since 1983, he has had a track record of a 20% per year compounded rate of return. That's quite attractive. So there are funds and wealthy people on Wall Street who meet his minimums that would say, I'll give you $1 billion or more, or whatever, some large amount of money, and for you to manage it. And he says, don't send me the money. I won't take your money and do nothing with it and charge you a fee. And I'm not ready to deploy it yet. When I am, I'll call you. And that's what and if you send him the money, he'll send it back. So Buffett is different because he's public. It's Berkshire Hathaway, which is publicly traded. But he is also accumulating cash, waiting for that opportunity. Jeremy Grantham is saying the same thing, but a different version. He's saying super bubbles, and the super bubbles tend to crash. David Hunter is a little different yet, and he says he believes next year, 2025, I don't know, that's a 12-month period, so I don't know when, but if he is right, that means that somewhere in that 12-month period, approximately, could maybe go a little beyond it, he believes the market is going to crash. And he says this, I quoted this last week, the crash will be 2008 on steroids. Well, the way I interpret that is that the S&P 500 went down 56% in 2008 from its peak in 2007. And so that would tell me he's looking for probably a 60, 70, 80% kind of crash. I don't know that. It's just, I'm trying to put, what does that mean 2008 on steroids actually mean? But then he says, and of course it'll recover from that. But then he says, I don't know how he figures this out, but if he's right, he says, then the big collapse happens to our economic system. And in 2030 or thereabouts, maybe it's beyond 2030, the whole system will collapse, which means our economy and our currency. So, and the treasury and everything. And he says a lot of implications about that, meaning that a lot of the entitlement programs will just go bust. There won't be money to pay for them. And the Fed is out of tricks and they won't be able to print any more money. So that's what he calls really the big collapse. So is he right? See, I don't know. And you may agree with him or disagree with him. He is credible, so in my opinion. And so I'm playing clips from people like David Hunter and Jeremy Grantham and Warren Buffett, and I think I've played some from Seth Klarman. I play things like that because the industry, the financial advising industry, doesn't want you to hear that. They don't want to believe that. They want to believe a narrative that the market is always going to go up, and if it comes down, it'll go right back up, and you've got nothing to worry about. If you try to deal with these issues like these gentlemen do, and they've all done it successfully, if you try to deal with that, they diminish that and say, you know, you can't time the market, or you can't sell now, and you've got to invest for the long run, and so forth. And they put people's money in a very different place than the way these gentlemen manage money. So they take it in and buy bonds with it and stocks with it. None of these guys, especially Warren Buffett, does that. So why is it that the successful people like Buffett and Seth Klarman and David Hunter and Jeremy Grantham, why do people like that, or Felix Zulauf and others who have been very successful, why are they able to do this, but yet the average financial advisor, traditional financial advisor, says you can't do it or you shouldn't do it? It doesn't make sense to me. Why are the wealthy people who have access to these type of managers, why are they so successful, and that you and me, the average person, isn't? So that just strikes me as a little, I'm kind of I don't know, maybe a contrarian, but I don't like that. So, so I wanted to give context. That's the context I want to give. Whether you agree or disagree, I want you to hear those. If you want to listen to them, they're in last week's broadcast. And So then I want to spend my time talking about what you can do about it. Now, with David Hunter, there are two scenarios. One is the scenario of 2025, if he's right, which is a stock market collapse. That may happen. If it does happen, it could happen over a year or two or three. Deep declines don't happen quickly. They happen over that kind of period of time. And then the complete collapse being in 2030 or beyond. So I'm going to mix this a little bit. So my preparation, what I do personally and what I advise people to do are the following things. The first thing you do is, if you can, position yourself so you pay off debt. Whatever debt you have, pay it off. That can include a mortgage or not include a mortgage, but at least consumer debt. You should do that. Secondly, and you do that because you don't, when this sort of thing happens, you want to have some cash. You want to be able to invest the cash, and you can't do that if you're sitting on top of debt. Secondly, have silver and or gold. Why do I say that? Well, and my preference, by the way, I've said it before, my preference is silver, but there's nothing wrong with gold. And the reason that I say silver is because if in the second scenario, more so than the first, if the system collapses and the currency collapses, you're going to need something to buy goods and services with, particularly goods, the essential things that you need. And to do that, in that scenario, in my opinion, silver is going to go way up. Instead of being at $30 an ounce, it may be $100 or $200 or more per ounce. Gold, instead of being at $2,000, $2,400, is probably going to be at $5,000, $10,000 or more per ounce. So if you have that kind of money and you're going to buy groceries or you're going to buy fuel for your car or truck, it's not going to work very well. It will work a lot better if you have ounces of silver. The denominations are more in line with the things that you would need to buy. And in that scenario, we would likely be in a barter system if the currency collapses, meaning the dollar is worthless or people are not taking the dollar. So right now, there were 44 countries who are dealing with Saudi Arabia right now, bypassing the petrodollar, the US dollar, which Saudi Arabia was required to, we made a deal with them that we would give them military protection in exchange for them selling oil. This is back in the 80s, them selling oil in dollars. And so everyone honored that, except that deal expired last month. So they, even before it expired, they were selling oil in other currencies. So, and there were 44, actually one of them backed out, Argentina backed out. So there were 43 countries that signed on to a deal to buy oil from Saudi Arabia in their own currency, not the dollar. So we have had, this has helped prop our currency up, is the fact that other countries are doing business in dollars. That's not the case anymore. Maybe some are, I think some are, but that's not helpful. And then we have not, during that 40-year period, we have not added, to my knowledge, have not added to our gold reserves at Fort Knox or the New York Federal Reserve Bank, wherever they store the bars of gold. We have not added to our supply. So the printing of money has gone, printing, which is digits, the issuing money in digits has gone on and on and on, up into the trillions and trillions of dollars, zero more gold behind it. There is gold behind it, but it has not increased since the early 70s, to my knowledge. They have also, to my knowledge, not audited those vaults. So we don't really know what's there. So I'm not a naysayer. I'm not saying some government has emptied our vaults. I'm not saying that because I don't know that. But I am saying that without an audit, we really don't know what we've got. But it does not appear that we are adding to that. Who is buying all the gold? China, number one, Russia, and India, in that order. They are buying all they can get their hands on. This is way up in the 90 percentile, maybe between 90th and 99% is being bought by those three countries and has been for quite a while. So the reason that you would buy silver or gold would be to be able to barter with something that has intrinsic value. I know there are people who believe in Bitcoin. Maybe Bitcoin will be there. I don't know that. I know that gold and silver have intrinsic value, and it is an agreed upon number, and it is physical. You can go into a store and buy something with it. So I got this idea from, it's not a unique idea, I got it from reading Jim Rickard's book, The Death of Money. The other thing that Jim Rickard says is, and by the way, before I go on to this, Warren Buffett, who has, frequently disparages gold, he never disparages silver because he owns 129 million ounces of silver and has since the late 90s. I think that tells you something. When you have gold and silver, you should store it in a safe place. I'm not going to tell you where. I certainly will not ask you where you store it. I would not store it in a bank. I would not store it in my home. I would find a place that you feel comfortable with where it is safe. Dave Ramsey talks about it being a terrible investment. It tells you how little Dave Ramsey really understands about gold and silver. It is not an investment. It is an insurance policy against the decline of the dollar or the elimination of the dollar. If you get to a point where you need something of value, intrinsic value to barter with, the paper dollars that Dave Ramsey loves is not going to work. And by the way, the reason he says that, I think he's very good at helping people with budgets and paying off debt. He's very good at that, but there's no money in that. So what he's found that there's money in is getting you to call his show, and then when you call his show, you give him your email address, I'm interested in this or that, and then he sells that name for $180, is the last number I heard, to financial advisors who call you up. They're salesmen. They're not fiduciary advisors. Most of them are salesmen. They call you up trying to sell you on this investment or that, none of which is gold. And so if you divert some of your money over into gold, they're not going to get a commission on that. So they're commission-based, most of them, and they're looking for how they can sell you something. So my opinion of him is very low because he doesn't disclose any of this. I had to do some digging to find out all this, but I do give him credit for the things that he's done well. And more like Jim Cramer, mostly he's an entertainer. If you like to be entertained on financial subjects, tune into Cramer or tune into Dave Ramsey. They do a pretty good job on that side. And so back to Jim Rickards, the other thing he recommends in his book that I think makes sense, and I've done it, is to accumulate physical cash. I do it in $20 bills. You can do it in $100 bills or 50s or whatever you want, but try to accumulate some money so that you have that. It's not invested. It's not in the bank. It's not in investments. It's in physical form in a safe place. I do not put it in my home, and I do not put it in the bank. So I'll just leave it at that. And there's a reason why I think Jim Rickard says that, because if the dollar is still around and very few people have dollars, let's just go back to the Great Depression, very few people had dollars, and you need the physical currency to be able to transact business. You're not in a barter system, but there's an absence of dollars. Okay, maybe having those physical dollars will help you. As I've talked to people about this, many people have said to me, so do I. So I think there's quite a few people who take that approach. The other thing that I do is have a food supply. So I have a substantial amount of food in storage that if we need that. And I also grow my own food, and I have access to farmers here in the valley that sell food, and so I have a relationship with them and know them well. And so if what I grow and what I have stored is not enough, I have access to some others. And we may get to a point where there's already food shortages in some areas, maybe not completely, but I won't go into detail on it, but if you think that can happen, I think it can. You need to be prepared for that because you don't want to starve to death. You also need a supply of water, an independent source of water, as best you're able to do it. The next thing that I do is I invest my money along with my clients' money tactically. In other words, I invest it. I don't leave it there. About 30% of the time, I am out of the market, sitting in money market funds, earning about 5%. And you could say treasuries or, something like that, but, I have it in money market funds. About 70% of the time, it is invested. This year, with most of our strategies, we have, with most of my clients' money and with my own money, we're now investing it with artificial intelligence, using that to sort out information about the market, of when to be in the market and when not to be. So far, in a short period of time, that has been even better than what we were doing before with our mathematical methodology. It seems to have sorted out, picked out data and investments, when and what, better than we were able to do it mathematically. And I do not like, the traditional approach is to use bonds or bond funds or bond ETFs. Warren Buffett does not use bonds. Of all the money he's got invested, he says he has zero in bonds. And I mean, like government treasury bonds and or corporate bonds. He just doesn't believe in it. Why would he say that? He says it because they are a poor investment. There is too much risk, be it credit risk or interest rate risk, too much risk for too little return. And they're just highly volatile. The long-term government bond ETF, TLT, has declined in value about 50% in the last 4.5 years. When it was needed in 2022, when the market went down, S&P went down about 24%, the NASDAQ went down about 33%. When it was needed, it was not there. It was declining as much or more than most equities. So, and it just, whenever it does provide a rate of return, there's too much risk for the rate of return that you're getting. So I do not use that. I use equities only. I use equity funds, and find that to be the best approach, and then get out of the market when the market is declining, using some kind of methodology. I've already told you what I do. So those are the things that I would say to do, and they are the things that I do for myself, and I recommend this to clients as well. Okay, now I want to cover one more. I want to give you one video, and this video is from Danielle DiMartino Booth. She was a member of the Federal Reserve Bank of Dallas for 9 years, worked directly with the Dallas Fed president, Richard Fisher, for that time. And she has a book out. It's called Fed Up. And she's not a fan of the Fed, even though she used to work there, maybe because she did work there. But she is, she's doing an interview here, and she gives her views on the Fed and actually on the economy. She spends a little more time on the economy and the Fed and currency, money supply, et cetera, than she does on the stock market. And she, she believes that we are headed, not unlike the gentleman I just described, she believes we are headed for some kind of a crash. And the way I'm listening to her talk, I think she believes that it's not that far away. So again, consistent with what I'm hearing from others, based on the people she has access to and her research, I consider it credible. So I'm going to play this clip, and then you can listen to it, and then I will have a comment at the end.
So do you think all hell is going to break loose?
Something is definitely gonna give, and I get the sense that something's going to give in the next few months, and then all hell breaks loose. This is United States of America in recession. Everybody's getting fired across all industries, and it's happening really fast. Americans are working as much as they can, but Americans don't have enough work to make ends meet. There's a lot of unrest. It's no longer possible to gaslight the United States populace. They know something is wrong. When I hear from the head of a food bank in Tampa, Florida, that he's gone from 20,000 to 40,000 families per month, and that from the moment the doors open until the moment the doors close, from dawn to dusk, that there are people lining up to get food to feed their families, something has gone wrong. But nobody's ever gotten this information out of me, by the way. So hats off to you, buddy.
We spoke about how auto loans were in default, how mortgage forbearances, like we've never seen before. 4 years now of mortgage help and forbearance.
I mean, forbearance didn't end on the FHA level until November of 2023. I mean, we're just now seeing, people are always like, where's the recession? And I'm like, how do you have a recession when you gave away, upwards of $1.5 trillion in PPP, most of which was fraudulent, employee retention credit, most of which was fraudulent, and EIDL loans, a lot of which was fraudulent. How do you have, and nobody's getting thrown out of their homes. So rental eviction moratorium, like, people are like, where was that recession that you were calling from? And I really have to push back, because mathematically I was like, impossible for us to go into recession until they pull the plug. They pulled the plug last September. It looks like recession started last October.
So do you think all hell is going to break loose?
I think that the difference between, people keep asking me what's changed, Danielle, and the difference between 2023 and 2024 is 2023 were kind of these nice, polite, white collar layoffs, 6 to 9 months of severance. If you worked at Google and made $300,000, you were getting 60% of your salary for 9 months, and it wasn't really like some kind of a financial disaster in your life, right? 2024, it's like, hey, this chain of retail stores is liquidating. They're going to close all of them. You're going to get 60 to 90 days of severance if you're lucky, right? There have been furniture manufacturers, a lot of the companies that have been affected by all the demand that was pulled forward when people bought homes. There have been companies that have just, hey, it's Thursday, don't come to work on Friday, and we're not giving you your paycheck. And they're being sued, for not providing notice of firing people. But the difference between 2023 and 2024 is speed. And everything is happening right now really fast. We've had about 100,000 layoffs announced every single month, in months that's not supposed to. January is supposed to be your big seasonal spike. We're going to fire everybody, clean house, and then we'll have a great rest of the year because we're going to, right size the business model. And then came February, March, April, May, June, July, and you're like, what is going on with these layoffs that are not stopping? And again, I think the difference is CEOs and CFOs across the spectrum. This is not just Silicon Valley got fat. This is United States of America in recession. Everybody's getting fired across all industries, and it's happening really fast. And until the shareholders are happy, the CEOs and the CFOs, they're not going to stop firing people. And that's exactly what we're seeing in the current earnings season. Hey, Salesforce just reported with more layoffs. Hey, Spotify just reported with more layoffs. And that's exactly what we're seeing. Until the shareholders are happy, that's the mantra for 2024. Until my shareholders are happy, until I've cut enough costs and fired enough people.
Yeah, a lot of people don't realize that. They think, we look at small businesses across America. I mean, true small businesses, mom and pop shops, and they will throw their own paycheck in a drawer before, not paying their employee. They'll go down with the ship. But these publicly traded companies or large corporations, I mean, they just come in and slash jobs, close locations. It's yeah. A lot of people, they think that they're working for a bigger company and they're in a safer position until shareholders aren't happy.
So as she says in this clip, all hell breaks loose. Well, that's a very strong statement. But what she's talking about is back in September, October of 2000, I think it was September of 2023, that's when all of the propping up of the currency stopped. And so now they are kind of letting the system, I guess, collapse. So the recession, as she says, we're in, the declining earnings, the difficulty that a lot of companies outside of the Magnificent Seven, the rest of the market is struggling. People are struggling. And you know this. So she's not saying anything that's out of line. So again, I think it's credible. You can do with it what you want. I've already given you my ideas on some solutions. Those are the things that I'm doing. And you can certainly look her up and look at her talk. She's does a lot of videos. She also has a subscription service for people who want to get access to her information every week. I do not subscribe to that, but it's available if people want to do that. Okay, thank you for watching. If you have questions or comments, leave them in the comment section below.